Welcome back. On to some key earnings reported after market hours yesterday. ITC, it was a resilient quarter, and Mangalam is joining in to give us a fine print of the numbers. Considering all the demand environment commentary we have been hearing, Mangalam, how are the numbers looking like?
Well, the demand environment commentary is still tough, but the numbers are fairly resilient, as you pointed out, Hormaz. And, the street was positioned for a weak set of numbers. The company actually did a slightly better shot as well, because if you look at it, the stock was at the low point of trade along with all the FMCG stocks. So cigarettes and FMCG in ITC were stable. Hotels were good. It was the Agri business that really shone through. So if you look at the revenue, that was a beat on street expectations, largely because of the strong performance that came in the Agri business. Good performance in the hotel business on a strong base. Remember, same time last quarter, we had the G20 summit as well. Margins, however, were slightly lower on account of higher inflation in leaf tobacco, FMCG input prices, and the paper business weakness as well. So put all things together, we have the revenue coming in at 19,328 crore versus street expectations of 17,710 crores. The EBITDA at 6,335 crores. The street was working with a number of around 6,375 crores as well. And the net profit at 5,078 crores, largely in line with street expectations of 5,050 crores itself. Cigarette volume growth going at 3% versus 2 to 3% expectations is good because it's at the higher end of the range. FMCG revenue, that was slightly subdued, and that's where the management commentary, really played out. 5.5% revenue growth versus 7 to 8% expected. Hotel business, again, higher end of the range. 10 to 12% was the expectation. 12% is what the company reported. And Agri, that's where the outperformance came in. 47% jump in the revenue versus expectations of just around 10 to 15%. Value-added products and leaf tobacco did a lot better. Paper was expected to decline, but at 2% still continued to be weak. That was a drag on the margins. Expect the stock to see some green, especially after the drubbing all the FMCG stocks saw yesterday.
And there'll be some relief, isn't it, after all the red that we have seen all these days. Mangalam, thanks a lot for that.